Good morning, everybody. Welcome to another Daily Market brought to you by Mike York. Today is Friday. Happy Friday, everybody. It is July 12th. Hope you guys are having a great day and have some great upcoming plans for the weekend. Hey, we do got basically one set of economic data for the calendar today, and that is the Producer Price Index for the month of June. So in the month of May, we had 0.1% increase. Forecast for June was supposed to be nil, and it did go up 0.1%. However, this is the headline number. The year over year dropped from 1.8 to 1.7%. So we did have a little bit of a drop there. Then we got the core PPI, which is where you strip out the food and energy. This gives us, the uncontrollable variables. We kind of remove that, and now got more basis here. And this is more what the Fed will look at. And we had a 0.2% increase in May. Forecasts were calling for the same in May, and I'm sorry, for June, and it increased to 0.3%. However, its year over year remained at 2.3%. This has been kind of stuck in the 2% range for quite some time here. And it doesn't weigh as heavily as our PCE or our CPI number, probably because this is the inflation on the wholesale side of things. And even though things change for the wholesale, it doesn't always get passed on to the consumer. So the Fed will mostly look at what is passed on to the consumer, and that's why this doesn't have as much weight. But we do watch it. I mean, at some point, if their inflation goes up and their costs keep going up, they're going to have to pass that on to the consumer, and we'll see that. So it gives us a little bit of gauge as to what we can expect, because obviously there's got to be some type of threshold for them and how much margin wholesalers can, give or take anytime with prices going up or down. Let's try and move on here to the headline news. Stock market is, Stock market is up. It had a pretty big rally late in the day yesterday. Dow closed up over 200. Today's up about 100 points today. So we had some pretty good news. Testimony for, we had Fed speakers. We had the Fed chair, Jerome Powell, with Congress the last 2 days. Kind of almost reiterated that we're on path to have a rate cut this month. Again, most likely won't be the half point what they initially thought, or what some thought, and not everybody thought that. Some people thought there might be a little more aggressive path of a half a point cut, but more in line with the quarter rate cut. Now, one thing they'll probably won't watch is we've been kind of seeing this inflation, like this PC or CPI, and then this go up slightly on the core level. We want to see what the PC does. So if that goes up, could that alter Fed's thinking in terms of any rate cuts? So it'll be interesting to see. That could also spook the markets a little bit as well. But meanwhile, the markets are liking what they're seeing, and so they've been kind of running off, so to speak. Yesterday we did have bond 30-year bond auction. It didn't go so well. So this is why you see a pretty big drop. We dropped about 34 basis points, pushing us underneath the 25-day moving average. We're currently below it. We're up about 9 basis points. Since we're now under the 25-day moving average, which becomes our ceiling, our next springboard will be the 50-day moving average, which is approximately about 20 basis points, a little bit more lower, or almost a quarter point in terms of pricing. So that could translate to an 1/8 of a percent in our interest rates difference. So if we drop all the way down to here, which there's a good chance before we make our way upwards, we broke our trend, and for worsening, I think it's a short-term break. I do think the longer term, you'll see this keep rising a little bit further, but short-term, we got a speed bump, and I think we'll most likely hit the 50-day moving average before we see it continue rising upwards again. We'll need that kind of springboard, so to speak, for it to kind of go upwards. But this will be the next level, and could it break below it? That is possible. And then if you look down a little bit further, we got the 100-day moving average along with this Fibonacci, which will be a pretty strong, because you got a double barrier there. It could provide a pretty strong support there if we break below this 100-day moving average here. So most lenders had the price for the worst yesterday. They did change their pricing yesterday, so pricing did worsen yesterday. So today I would say that it's unchanged from that pricing that they had yesterday, as they worsened their pricing later in the day. Here's the Treasury. Treasury, same way. It's broke above it. We're up at the 212 level. As we said, we caution that if it stays above this, it did broke its downward trend. Again, I do think it's a short term short term. I do think in the longer term you'll see it come down. But in the immediate impact, we have a little bit more room here again until we hit the 50-day moving average, just like the mortgage-backed securities here. So rates again will be unchanged from the pricing after we saw the price change for the worse yesterday. So we had price change yesterday. Pretty much all lenders had a price change for the worse as the market deteriorated, and then we're about the same as what we left off yesterday. All right, so that pretty much is a wrap. If you guys are looking to buy a refinance, I am a loan officer. My company serves all 50 states. We are home to the all-in-one and home-funded loan programs. Fantastic. All-in-one is definitely the only mortgage program that is principal first. So any payment you make into it is basically 100% to the principal. I'd be more than happy to go over it with you. And if you are interested in a program like that, Home Fund is a great down payment program. Can be used for a lot of different avenues here. So again, we could talk a little bit about that. If you guys are interested in any down payment programs, this could be useful for first-time homebuyers and for people, especially in wedding registries. It could be used for wedding registries. It could be used for people who have a life-changing event in their life, such as a divorce where one spouse keeps the house, the other one has to look for another. Or somebody who had, here in California, we have wildfires. So if somebody who lost their home there now needs assistance to help them find another home, this could be a great avenue for them. We are, like most others, we do carry we work with a number of jumbo investors, so we can help you with the jumbo financing to conventional with Fannie and Freddie, both Fannie and Freddie Mac. Got FHA, VA, USDA, and we also got niche loans that a lot of banks don't carry. We got our investor loans for, we got a program where basically it's no ratio, or we'll look at the ratios between the lease and the housing payments, as long as it meets within that ratio. We got bank statement loans, which are great for self-employed borrowers who are a little bit aggressive with whose tax returns kind of prevent them from qualifying where they want to be, but they got the money in the bank to show that they can support it. And we got foreign national loans as well. So any of these loans interest you, go ahead and direct message to me, and we'll connect and see how we can help you out. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.